Robert back at you again. Wanted to talk about FHA and their assumption process. In the environment that we're in, we're all looking for the things that we can do to lower our costs across the board. And it's no different for those of you that are looking to buy a home. Assumptions are a hot topic, and we're going to get into the FHA version of what you need to know with this video. Let's do it. Who should use this program? In my professional opinion, anyone that is looking to purchase a home that has not or does not currently have an FHA loan, this is a great option. And obviously sellers, this program is something that you want to make sure that your agent, your realtor knows about if you're in the market to sell your home, because this is just going to allow you to attract more buyers, for you to be more marketable, especially if you have a very favorable interest rate. So in my opinion, everyone should be looking for this product to see if it fits your needs to get into a home in this environment. So let's move forward. Why? The why on this product or this program is, it's obvious, right? You're looking for the lower interest rates on someone's current mortgage. Keep in mind that you will have to assume the person's current mortgage and or interest rate. So if there is a difference from the sales price to where the current mortgage and interest rate is, you would then have to make up that difference. Okay. The second reason to use this program is because, again, there's no first-time home buyer requirement. So if affordability is something that is paramount to you, meaning that you can't secure a home with higher interest rates, this is another option for you to look into on the FHA loan front. Let's move forward. How does this program help? Obviously, it helps with affordability if and only if you are able to make up the difference, the gap between where the current mortgage and interest rate is. Don't want to hype this up and not give you the real, but there are a lot of you out there that have monies, okay, or you have access to funds to be able to shorten that gap or overcome that gap. But keep in mind, you're just assuming the current mortgage balance, or what the servicer, the current lender, says needs to get, or what they need to get to satisfy the current balance, and the interest rate. Second thing, or the second way it helps, the closing costs are much lower. Again, that helps with the affordability piece, in that you don't have to put a lot of monies towards closing costs, and you could take those monies to help overcome the gap if there is one. And the biggest way that this program helps is that you can do a simultaneous second mortgage and or HELOC. You can use a HELOC to make up the difference between what the principal balance and interest are and where the sales price is. So these are things that you need to keep in mind, and you need to understand if this strategy is one that you are going to look into. Now, let's set the expectations. What you should expect as a buyer of one of these loans, or homes with one of these loans on it, and or a seller. The first thing you need to understand is that it takes time. You're going to be dealing directly with the current seller's lender. You're not going to be dealing with somebody like myself, okay? And so you need to understand from the buying perspective and the selling perspective that you got to have some time. 45 to 60 days. Why does it take so long? Be honest with you, you're going to be dealing with folks that work at the bank. They're not really proficient in these things. Doesn't really benefit them, to be honest with you. And so it just takes time. Sometimes it takes time to get very favorable things for you. So have patience. Another thing, from a selling standpoint, you need to know and understand what your current servicer, the place in which you make your payment, reach out to them. Find out what the process is for someone to assume your loan. Typically, they'll send out an assumption packet, but they will explain to you what will be expected as a process for a potential buyer to assume your loan. That buyer, from a buyer's perspective, you do need to understand that you have to qualify for said loan. You have to qualify with your income, your credit, and your assets, or have a second source lined up or a HELOC lined up to make up any differences that may be there. Those are the things that you need to expect. Lastly, from a buying perspective, you will be assuming the mortgage insurance premiums, or the MIP. And with most of these loans nowadays, the way they were originated, where folks more than likely put less than 10% down, that's for the life of the loan. But you have to understand the benefit that you're getting is you're assuming a lower interest rate if you're going to do this type of a deal. So in conclusion, just to wrap it up, first-time home buyer or regular home buyer, as long as you do not currently have a FHA mortgage, it must be owner occupied. There's no investment or investor type scenarios that you could look into. Okay, you have to be patient, 45 to 60 days, because you're going to be dealing with the seller's servicer to process this transaction. And you, as a buyer, you have to qualify, income, credit, assets, and have a plan of action on how to make up any difference if there are any differences. Seller, you need to make sure that when you reach out to your current servicer and ask for that assumption package, that you know and understand once the assumption takes place, the process in which they need to get back with you to release your obligation, to release your liability from this loan. That's very important. Also, seller, if you're successful with one of these transactions, as far as someone assuming your current loan and you've sold the property and your current liability has been released per HUD, you may receive some of those upfront premium funds that you paid when you originated the loan. Just depends on the time in which you've done so. So in conclusion, this is another great strategy, a solution to help those of you that want to get on the property ladder but may be challenged with the higher rate environment. This takes a little more work. It takes the proper team. But as I say, or as this last screen says in conclusion, home ownership is achievable with the right programs. In this case, FHA assumable loans, the right plan. How are you going to come up with any difference that you may have with this FHA assumable? We know you could do a simultaneous second mortgage and or HELOC. I suggest that you speak with the servicer of the lender that you're working with to assume the loan. They more than likely will have a solution for that. And then the right partnership. Got to find the right realtor and the right seller in this case. So there you have it, guys. Another solution, straight to the point. If you like videos like this, watch this video here to learn how to assume a VA loan. My time is up, guys. I thank you for yours. As I always say, let's be good to one another. Let grace abound. And until the next time, peace.